So you're into these particular ventures, so tell us a little bit about them and the attraction, essentially.
So we invest in Southeast Asia at this point. A lot of it is early stage investments. We've kind of shifted quite a bit to focus more in Southeast Asia hardware recently. A lot of it is actually centered within semiconductors, given where the geopolitics is and the sensitivities around hardware supply to China or the US is. We're doing a lot more in automation, and we're looking a lot more into energy transition, given where the regional grid, energy grid story is being built in Southeast Asia right now.
Yeah, I'm curious, what opportunities on a startup scale are actually in semiconductors? Because that seems to be a very capital intensive, as you know, and it's such a an industry that needs scale, basically.
Yes. Yeah. So within Southeast Asia, 70% of the semiconductors hardware front end and back end is actually located within Malaysia. Within that, you talked about the more intensive space, which is really just foundries. Yeah. So the Intels and Global Foundries, we don't invest in, but there are design houses such as Infineon's, Skychips, which actually we are looking into. And the design houses kind of is a bit more Holdings like, supplying then to Intel and Samsung. We're also playing on their, testing, automation, and packaging precision metals in Southeast Asia right now. A lot of the semiconductors, we've kind of said we won't be investing in just, a race to the bottom in terms of technology, but kind of doing the base stuff, going into EV cars. You need about 7,000 chips to go into a Tesla, for example. We're supplying that base semiconductor going into EV cars instead of just investing in the EV cars itself.
Can you tell us a little bit more about just what the fundraising environment is looking like these days?
It's been mixed. So we've invested in equity and debt. Our debt portfolio is already returning a 28% IRR annualized, and so that's been quite strong for us. So for that, we're raising a new fund, and that new fund, at the very least, we've got 35% anchored by an existing LP already. So not so bad, actually.
Well, how big is that fund?
It's going to be a minimum 100 million and 200 million max.
Okay,
fund.
and that's fully private credit.
It's all private credit, correct?
Okay, and do you get a sense that is there leaning more towards debt these days than private equity because of how hot? 28%.
Yes.
How do you do that, right? Yeah.
So 15% of it is actually interest or yields. The 13% comes from equity warrants. And we do see from both on the interest and the debt side and the warrant side, which means the equity being particularly strong in Southeast Asia right now. I'd say that mark-to-markets on the later stage has been okay given the flight to quality by the bigger investors. So on the interest side, we've seen people being a bit more aggressive with refinancing earlier rather than later, and so okay to take a little bit higher interest now versus kind of pushing it backwards where Fed has just continuously rate hike.
Richard, what are the major themes that you follow as well? I mean, looking broadly, we've got, of course, decarbonisation, the Ds, decarbonisation, demographies as, of course, people get older, and, of course, de-risking or decoupling here. Does that all play into what you're looking at as well?
Yes. So we have benefited quite a bit, or Southeast Asia has benefited quite a bit in terms of the +1 story, either US +1 or China +1, or kind of rest of the world +1. We've seen the regional integration in Southeast Asia between the collaboration between Indonesia, Singapore, Malaysia, Thailand, Philippines. I think for the first time we see a very politically stable region where most of the countries already actually have had their change of guards, and I think the only two countries next year is really Indonesia and Singapore, which, I think we're pretty comforted that they've been kind of, been structured in a way that I think there will be a smooth political transition. And so, yes, on the geopolitics, we've been big beneficiaries in Southeast Asia. On the growing population, I think it's not so much on the older generation coming to pass, but also the younger generation being a little bit more wealthy or having more disposable income that has benefited us as well.
Overall, just can you tell us how much dry powder are you keeping as well? Just given that last year it was all about valuations were plunging, economic headwinds. Are you keeping something for a better days here before you look at more opportunities out there?
I think for us, we're true fund managers in a sense that bad markets, good markets, we will still invest. Hopefully, we are better negotiators than the rest of the guys. We don't time the markets that much as opposed to kind of looking for bright spots in the sectors. So within Southeast Asia, for example, I think the digital space has been tough in the last couple of years, given where valuations is, and so therefore the shift towards hardware a little bit more than the rest of the guys. We have continuously invest. We're about 55% invested, and so we've got another 45 to go. But I'd say by end of the year, we'll probably be closer to 65. And so we're not keeping dry powder. We're gonna keep investing, and hopefully we do the right thing.
You mentioned already valuations in some parts did look challenging, let's put it that way, going into this year.
Yep.
How are they now in terms of like entry points, and how do they look in terms of, are you considering any exits, for example?
We've done 2 exits, which has been good in the last 2 months. So actually, I think if you're pragmatic about what you're going to get, I think it's okay.
Okay. If you're not picky.
Well, if you're not targeting for 10x, I think you could very comfortably get a 5x, which is not the worst outcome. And I think the guys who are holding on for that 10x will see the dilution coming in much stronger and harder than they've ever anticipated. So we're not that fussed about where we are as long as we return capital, and we're pretty motivated to give out distribution to our investing LPs. And so from a valuation standpoint, we've seen valuations moderate but not have came down significantly. And I think there's a fallacy to say that Southeast Asia is going to have a crash, because money from the US and North Asia are still coming in a very big way. And so from our standpoint, it is unlikely that we see the drop or a race to the bottom. Versus, I think there's still a flight to quality, and the bigger and better investors who understand the markets well will continue to deploy.